I'm Justin Bonds from Cyber Capital, which is a cryptocurrency investment fund that does research long-term. We've been doing this since 2016. And as a fundamentals, really value investing fund, we're really looking investing based on principle, and we have really high standards in our investments. And we actually came to the point of actually rejecting Solana based on several red flags that we found. And as a value investing fundamental based fund, we follow that through. So that makes me a critic of Solana, so to speak, which I feel very welcome to talk here today. Now, this is a Solana themed conference, and I'm here as really the only naysayer. But I do want to start off by saying that I do actually appreciate a lot of the technology that is in Solana. I think there's some great scalability improvements there among the different features. So I'll start off by going back in history, so to speak. And this is because we've been a long time operating fund. We've been watching Solana since the very beginning, and we've been holding people up to high standards, so to speak. And something happened in April 2020 that as an investment fund, we just weren't happy with, so to speak, in terms of the conduct. So I'm not sure how many of you are familiar with this, but this can all be verified through the Wayback Machine and Telegram messages and all of these things. And I have released that information separately as well on my Twitter. So in early April 2020, the Solana team was telling everyone that the total circulating supply was 8.2 million. Including the co-founder, Raj Gokal, I hope that I'm saying that right, who assured everyone over Telegram that this was the case. These messages can still be found in Sol Traders today. As questions and critiques started to pile up over the following weeks, the official moderators kept insisting that there was no extra circulating supply. Certain people grew more suspicious, especially as Solana failed to update their Binance info and CoinMarketCap profile. By the end of the month, an independent third party managed to find an unlocked Solana wallet containing 13 million tokens. Now this is obviously something that we would consider a red flag, but I'll go on and just lay out the history. Once the Solana team was fully exposed, they released a Medium article admitting to the fraud, explaining that these 13 million tokens were loaned to a quote-unquote market maker. They then promised to get these coins back and burn them within 30 days. On numerous occasions, the Solana team guaranteed that it would not release new coins into the market without first announcing it beforehand. On May 23rd, the Solana team announced that they were only able to retrieve 3.3 million coins out of the 11.3 million they had loaned out. Instead, they decided to release a new 8 million tokens into circulation in order to meet their commitment to burn without any announcement beforehand. Therefore, the total circulating supply was now 16 million, double the amount that was promised earlier in April. After this, they just moved on, not publishing this release on their official announcement channels on Twitter. So this is, the type of thing that we look for as an investment fund, is we want to see very upright behavior, and promises of supply, we consider to be a very critical thing. And in terms of, a promise to investors and, understanding, the market dynamics. And being diluted like this, I think, is a type of fraud towards investors, a type of thing that we didn't appreciate, at least as a FA-focused fund. So I think that's all pretty clear, that that's something that existed in Solana's past, which was for us a big red flag and really prevented us from investing. More recently, however, actually in September last month, I called out Solana again based on certain statements official channels had put out. This was when the Solana mainnet was brought down last month, and specifically Solana status, which was further retweeted by the official other official channels of Solana as well. They said this, quote, Solana mainnet beta encountered a large increase in transaction load, which peaked at 400,000 TPS. So just to start with some definitions, and obviously opinions can differ in here in terms of the semantics, and that's fine. But I would define TPS, transactions per second, as the amount of transactions a blockchain can process. So that would mean that these transactions would have made it into blocks. So what I then went on to do is to look at a blockchain explorer, and I actually discovered that none of these transactions had made it into blocks. And if you actually look at the history, there was no spike in transactions that actually made it into the blocks, meaning what actually happened here is that these transactions went into the mempool, which by itself isn't particularly extraordinary. We've had times in Bitcoin history where we've had over 400,000 transactions in the mempool. And there are ways to preventing this causing a crashing of a node. Instead, this very much read as if Solana was claiming that the network crashed at 400,000 TPS, which I would consider a very false claim, considering that those blocks never made it into the network, never made it part of the canonical chain, and therefore these are transactions that were actually never processed, so to speak. So as a FA fund, what we do is we establish investment principles so that we can use these principles comparatively and look at different cryptocurrencies across the board. Another one of these things we look at is how large is the quote unquote pre-mine. And I know that there are different ways to define a pre-mine. Just for argument's sake, and this, you can use the same ruler, so to speak, comparing this to other projects, we would consider everything but what was available for the public to be a pre-mine, so to speak. So we include things like private sales as part of a pre-mine, so to speak. And if you use this definition of a pre-mine, the pre-mine of Solana is actually at 98.4%. which we actually consider far too high of a number to be particularly comfortable with. And especially if we're talking about something that is a base layer that's really meant to be money and a store of value for the world as well, and a platform in our opinion. We think that's a very skewed way to start something like this, especially considering how much criticism, for instance, Ethereum finds itself in with its pre-mine, which actually totals less than 10%, which is considerably less than 98.4%. And this is, again, applying objective and consistent investment principles to all cryptocurrencies, including Solana, which is why it didn't make the cut for us, so to speak. There's another thing worth mentioning, which is the high node requirements. So it requires, in order to run a validator in Solana, you need at least a computer equipment worth more than 5,000 euros or dollars, which really is in the realm of enterprise hardware, not consumer grade hardware. And I do consider this to be too high, and also does make the achievements of Solana in terms of its scaling less impressive, because you can achieve very high TPS if you put the node requirements very high. And I'm not denying the other breakthroughs that Solana has made, but I do think that makes a certain trade-off in terms of centralization. Also considering that for a validator to break even on, say, within a year on his investment, he would have to invest at least $80,000 worth of SOL in order to break even. However, it's important to understand that there's a very high block subsidy occurring right now over Solana, more than 400 million annually. And this block subsidy is quickly disappearing, meaning that it will become even more competitive, and it's going to cost even more to actually run a Solana validator. to an inhibitive amount, you could say, which can cause all sorts of centralization issues further down the line. Yeah, and if you compare this number to the amount of fees collected, the inflation against fees, Solana is currently running at a loss at 95%. But you can excuse that as it's a new network, and you can't expect it to have the same type of traffic as Ethereum does today. But I do think there's some real fundamental issues here in terms of its design, which does lead to a much smaller amount of total nodes over the network. Also, comparing it to, say, something like Ethereum, I would argue there's also a clear lack of more formalized governance in terms of creating decentralized governance. I am, just for consistency's sake, I am also critical of Ethereum having a lack of formalized governance, but at least Ethereum does have multiple node implementations or multiple client implementations, which does help with the governance process, so to speak. But what we do usually look for now in third generation blockchains is different forms of more, let's say, complex and layered governance. Excuse me, that's just my cat. Let me just grab him here. So for instance, something like Luna or Tezos have things like self-funding mechanisms. And something like Polkadot has more layered forms of governance, like having a council, for instance. So I think what we've seen with BTC, in my opinion, is that governance is one of the biggest problems to be solved, and not attempting to really advance the question of governance, I think, is another area where Solana does lack in as well. I will mention this, but I'm not 100% certain about this in regards to proof of history. I do think there's a trade-off in losing determinism or non-determinism in this case, because if you're able to predict, if you're able to predict who is going to be the next validator, it also becomes more easy to attack the system for a set period of time. So I'm not saying this is necessarily a bad trade-off, but I do think it's important to acknowledge that there is a trade-off here when we look at something like proof of history. I think, how much time do I have left? I see. I would like to leave some time for questions, because I'm sure you'd like to answer some of the things I've said here. I will add as well, and I understand that not having sharding is considered a feature of Solana, but I suppose I am more of a believer in sharding. But at least in this case, I can be proven wrong in a few years if interoperability does not work out in the way that we want it to between shards. But I do think that sharding is a better way to solve the blockchain trilemma, so to speak. But obviously, there are also unsolved problems there in terms of interoperability. So, yeah, I think I'm happy to pass it over to questions. Actually, one more thing I'd like to add here. There is also something I've noticed about a lot of the design features of Solana, which is, for instance, the way that a lot of consensus transactions are. Consensus actions and state changes are counted on the blockchain as transactions. I don't see a good technical reason to do that, so to speak, but I would love to be, corrected on that. But to me, it does seem like an aspect of blockchain design that favors, let's say, attracting VC investment over, having good blockchain design. And I do see a pattern of this repeated in other places as well. Okay, I think that's my critique.
Yeah, thank you so much for the detailed explanations and things to look out for, and really showcasing the flip side of such systems. So we do have a question here. First one from Daniela, who says, would you reconsider investing when Solana improves its governance?
Yes, improve its governance and, just conduct themselves more honestly, like what we saw recently with the announcements they made. If they both improve their governance and, just their communications. Actually, who's the CTO? I'm sorry, I forgot his name. Help me out here. Alex, was it Alex?
Let's see here.
Let me just see. Let me have a look. I thought I'm talking to Solana people here.
Greg Fitzgerald.
Yeah. For instance, I think maybe him and also the other technical person. I really feel like when I listen to them speak, I feel like it's very consistent and it makes sense. But I feel like there's a disconnect between the work of some of these engineers and the marketing, and that's not necessarily to blame the engineers for that. And that can also be more of an organizational issue. But I would say a combination of governance and just more honest communication. And I think if we really see a pattern of that over the longer run and it continues to succeed, then we would definitely invest, because 50,000 TPS is actually a very impressive number to do on a non-sharded blockchain. But we have to also investigate what that looks like for the nodes and how that centralization occurs. But we would probably make a small investment as we investigate if we see these other things happen.
Yeah, precisely. And Pachenko here says, in your opinion, what kind of proof of is the best?
Well, proof of stake, actually. And technically, Solana is a proof of stake system. I mean, that is the consensus algorithm of Solana. It's just proof of history, the way we need to look at it. It's more layered on top to actually improve the proof of stake system, because then you have this type of determinism, and you can then predetermine who the validator is, and therefore now you have a synchronous calculation. And that's great, but I do think it comes with trade-offs, and that's that foreknowledge is an attack vector.
I see, yes.
Because you could effectively DDoS the IPs, for instance, and then maybe you could overpower the network over a set period of time. So then it just makes the attack easier as opposed to more difficult. Also considering that there's no slashing algorithm either. So that also tilts the incentives to being a bit considerably less secure, therefore.
And just to add to that, even on the back end of last talk, this was a question in regards to hacking issues and so forth. So what do you think, or what would your rebuttal be in regards to the fact that they de-incentivize by issuing punishment if you do hack the system?
Hack the system?
Yeah.
I'm not actually familiar with this feature. It sounds like a type of slashing to me, but that's is that more like doing a rollback, or like a social contract?
I suppose so, more so in the sense that that someone would manipulate the system for their own gain.
Right. Then there's let's put it this way. Then there's a social contract in place that says, if, say, the DAO happens, then we will roll back the chain. Is that the idea? Or roll back that contract. It would be more accurate, because the chain was never rolled back. I think that's a lot of people get that wrong, so to speak.
Okay.
That makes sense. Actually, the way I see it, I think it should come down to a vote through the governance, basically a majority vote. And I think in most cases, those proposals wouldn't pass unless it's just extremely catastrophic for the entire system for it to pass otherwise. So, and I think the DAO hard fork was an example of that. So I do think the DAO hard fork was good at hard fork, so to speak. And I think it's a case of, I think code is law, but I think, it's the intent of the law, not the word of the law that matters in that case.
Yeah.
And I think that's legitimate as long as you do it through consensus. So that would be my caveat to that question, is that as long as it goes through consensus, I'm not actually against it, but that does come with the understanding that smaller events they're not going to be reversed. And that's the trade-off of using a decentralized system, and unlike other systems like Binance and Tron, Solana is a decentralized public network. It's not permissioned in its infrastructure. So, I wouldn't take the criticism that far either in that regard, where I wouldn't even spend the time looking at Tron or Binance, but obviously I do spend the time looking at Solana.
Yeah. And Eleanor here says, wouldn't the pre-mine always be an issue though?
Potentially not. It depends on how much people care about something like that. The way cryptocurrencies work is that all those coins eventually just get distributed out again, right? It just takes a lot of time. And then you can look at things like rich lists and look at the distribution and who controls it. But it does start it on a back foot. And it also depends upon, people and how much they care about this. I think like a lot of BTC maxis maybe leaving Bitcoin might not be too keen on such a large pre-mine, but other people might not care about it at all. I think if you really want to be, money and store of value, which I do think should be an objective of every base layer, including Solana, and a platform needs to be all of these things combined. Then I do think, then having that sort of a supply distribution is something that holds people back. And that really, it's hard to answer that question. Can it overcome that? I would say yes, but there's more for it to therefore overcome, and that's not starting on the best footing.
Mm-hmm.
Justin, thanks for being with us. Really, I would love to pick your brain on crypto economics and the fundamental value drivers of a token. You assess like different projects and so on. What, in your view, are actually the main drivers of a token value?
Yeah.
Fundamentally, not market driven.
Yeah. No, absolutely. Fundamentally, I would say it's actually use. So that it's actually useful. And that's where Solana gets a lot right, with having very high capacity, right? Obviously, we're heavily invested in Ethereum with the understanding that sharding will bring very high capacity. We would not be invested in that project otherwise. So it's usage, underlying usage and utility that the technology allows for. And you combine that with good token economic design. And I think some of the best token economic designs we have now include coin burning. So you burn part of the fee. And again, this is something that Solana also does. They also get this right too. And I think this is very important for the economics of it. So the more use you have, the more coin burning you have, the more speculation you have, the more supply is withdrawn from the market. And I think that's really critical for it to build value. And there's also a virtuous cycle at play in terms of the more valuable a cryptocurrency becomes, the more secure it becomes, the more useful it becomes, and then the more secure it becomes in turn. So this is how it reinforces itself. And this is why, some people say, I only care about utility, price doesn't matter. Well, it does matter, because that's where you get your security from. And what can drive that value, I think, in the long run really is utility, which makes me a critic of Bitcoin, obviously, because I don't believe it has a lot of utility compared to second and third generation blockchains.
How do you now project, value accumulated in the future back to the present value? Like if you compare different projects, because if you're just basing or mainly basing it on the utility, then always these high transaction, then the value is a multiple of the throughput. Yeah,
no, that's a good question. And I think it's important to answer the question in terms of, do we invest based on future usage, or do we invest based on present usage? And because we're a long-term investment fund, we invest based on future usage. So we try to predict what the future usage is going to be. Current usage is a great indicator for that, but it's not the only indicator. And that's where, fundamental design is really important. And if you put a cap on capacity, then you put a cap on future usage. And I'm not convinced in a lot of cases that second layers are a replacement for on-chain transactions either. So, therefore, having very high capacity is important, but, not sacrificing decentralization and security is also important. And that's the blockchain trilemma, and
totally.
And I see how Solana solves that in some ways through his proof of history. But I do think there's trade-offs, and like all of these blockchains, they're all social experiments, and they're still ongoing and they're running. And we need to see these social experiments played out in the real world in order to know what the end result is. If we really want to be empirical, then we say, well, we don't really know the answer for like the next 5 years. say to these questions, and then we make our best attempt at answering these questions. We make predictions, we make investments accordingly, but we're constantly learning, and the fundamentals, our understanding is constantly shifting to go along with that.
Yeah, so thinking about the next 5 years, do you, like, if I understand right, you're saying the next 5 years is still like, you know, playground. We are still in the infancy space of layer one technology. Do you think, like, what's your perspective on development of layer one technologies? Will we see more new entrants coming into the market that develop like layer 0, layer 1 technology? Or do you think like the current ones will just develop further and battle between, like, win the battle between themselves?
I think a combination of both. I think there will be new entrants. I really hope there will be new entrants because I want to see different new designs tried out. I think, you know, some of the layer ones that we have today will still have in 5 years, and some, when you mention them, they won't even know that they exist. Like you mentioned some of the top 10 from 5 years ago today. You're like, what's that? I've never heard of that before. You know, just completely just faded into just insignificance. You know, the number of top 10 coins in cryptocurrency that we've seen that are just completely just unknown today is just phenomenal. So there's a lot of churn there, and I really should be very careful not to get sucked into the flavor of the month or the flavor of the year, so to speak, because they're constantly trading places, and there's a game going on with VCs getting in on their pre-sales and selling on retail. You know, that's not a game we play, because we really just want to invest in the best cryptocurrency at all times based on our fundamental research. But we see these games being played, and we're like, we're not interested. You know, we're really interested in the fundamental technology, and honestly, I'm not particularly happy with, I actually, there's not a single base layer that I can't make a critique of right now. And that I'm quite disappointed in the cryptocurrency ecosystem as a whole right now, but maybe I'm just a natural critic, I don't know. But I just, I can find problems with every single one of them. And some, and the least worst of them, we invest in the same way that Winston Churchill said, democracy is the best of the worst systems.
Well, it's actually good to keep a critical view, because when we point out flaws, then other people can fix them and build better solutions, right? So it's a give and take. One question from the audience was about your view on governance systems. Can you give some good best practices or sharings, what you're seeing in the market, what's happening right now?
Yeah, certainly. So in terms of governance, one thing I really like to see is what you call a self-funding mechanism. These are great for base layers as well. Examples of this might be Tezos and Luna. They both have self-funding mechanisms. And there's some older historical projects like Dash and Decreed that also have these mechanisms. And basically what you do is you take part of the block reward, a percentage of it, can even be something like 10% of the block reward, and you put that in a treasury on the blockchain, so to speak. And then, you know, through a proposal and voting system, you can then have these proposals funded, so to speak. And I think this mechanism is, one, it's very competitive, because in the longer run, you can really fund all sorts of really interesting things. Like Dash, for instance, had a call center, you know, funded by the blockchain, or you can have you know, you can do lobbying, you can do all sorts of crazy things with that sort of funding. And I think most critically, it also protects a blockchain against internal capture. Because what can happen is, if you have a small development team that, say, I don't know, in 10, 20 years from now, you know, just doing this as volunteer work, you know, large group can come along and say, hey, here's millions of dollars, and if you make certain changes in the protocol, and et cetera, right? So you can effectively capture a system, a blockchain system, especially if you have, you know, a very concentrated governance around the software development. If you have a single team, it's incredibly vulnerable to this type of corruption. So a self-funding mechanism, what it does is it provides funding to kind of have an independent source of funding. The funding comes from the blockchain itself, therefore that mechanism therefore creates a better alignment of incentives of who's funding the developers. And I think that's a very interesting system to explore. I think also another very, very important aspect, and Ethereum is lacking in both of these areas as well, mind you, is having longer lock-in periods for your stake. So when you lock your stake, like even locking it in for like longer than 4 years or something, I know people think that's crazy. But I actually think that might solve some very critical problems in blockchain governance, because I think, for instance, if I were to just summarize what I think went wrong in Bitcoin, not everyone thinks that Bitcoin went wrong, but that's my view on it, is that I think miners specifically, I think their incentive horizon was too short. So they were prioritizing short-term, mid-term decision-making over long-term decision-making. And that's because miners would have an electricity contract worth like 2 to 3 years, and the equipment would run out. So they had these shorter time horizons. And I think that led to decision-making that favored like not rocking the boat instead of doing what is the most sustainable for the blockchain over the long term. And therefore, I think if you apply that, we don't know if proof of stake really solves these problems, because we do have a better alignment. You're not creating a separate ruling class, right? In proof of stake, there's a better alignment of stakeholders with stakeholders, because they are also the validators, so to speak. But we don't know if it sufficiently solves that problem of the incentive timeline. So therefore, creating a very long lock-in period for your coins, I think, would be a very good thing. So those are the two things I would suggest specifically that would be very good for governance design in third generation blockchains.
Well, there's a lot of room for improvement across the entire ecosystem.
There really is.
Well, thanks very much. Well, Justin, like, you are funding these developments by being an investor. So I actually think you have a lot of influence to shape the economy. So it's really cool that you're combining capital and the brains to it. Thanks very much for being with us. We have as a next speaker somebody representing the staking system. This is Felix from Chorus One of the largest staking providers actually in the Solana ecosystem. So let's hear him speak. And Justin, Eleanor, if you're both there, I would actually be curious to hear your questions to Felix back and forth. I think that would be a nice discussion, but we keep constructive kind of communication within the unit ecosystem. Felix, welcome to our rooms. And Justin, thank you so much. And Ellie, thank you for making the connection.
Thank you so much as well. I know this was a Solana conference, and you led in a critic, and that actually says a lot about the community here. And I think that's fantastic. And I do really wish Solana the best, and you might still win our support in the future. We'll see.
See, we are unit, right, Justin? So we are basically another network bridging the different other networks built on Substrate. So we are not like the Solana community, but opening discussion because we want to connect different ecosystems. And therefore, we're super happy to hear your critical assessments. The entire day, we've been hearing, a lot of appraisal for Solana. And it's always good to hear all sides of the game and then consolidate, make conscious decisions. Everyone in the room, make your own decisions, do your own research. But it's really appreciative to also hear different let's say, more critical voices. That helps improving collective intelligence. Well, yes, of course. You're always welcome, Justin, to join our community, because that drives the level of discussion upwards, quality improves. Thanks